Hi, Kristen Cooper here. Thank you so much for watching. Today we're going to talk about, does everyone have a credit score requirement? Now, when we ask this question, what we're talking about is what's the use of credit and why do they need it? And what I mean by that is if you go to get a car loan, or a loan from anybody, whether it's a mortgage or a credit card company or an auto loan, they need to know what is the likeliness of you being able to repay this debt. And so one indicator of that is going to be your credit score. So do they require a credit score? Yes. Most lenders that you deal with are going to require a credit score and a credit report. And the reason why is that gives them an indication of the risk factor that you are to them. Now, the lower your credit score, the higher the risk. The higher the credit score, the lower the risk. So what they do is they need the credit report in order to mitigate loss. They need to be able to gauge what is the likelihood that you could default on this loan. The more risky, the higher the rate is if you're getting a loan. Or if you have a low credit score, you may just not be pre-approved for the loan or approved for whatever it is that you're trying to obtain by giving them a credit report. So credit factor is very important. And lenders need this in order to determine what their likelihood of risk is. And so yes, creditors are going to require a credit score and they do have to adhere to certain credit requirements. Now, depending on the type of financing that you're getting or the reason that you're getting a credit report, then there may be requirements that have to be maintained, and those are required because most loans are sold. Now, the reason that they're sold, after you get the loan, that lender sells them to a different lender per se, or wholesaler and investor. And the reason why is that when they sell those loans, that frees up money for them to be able to go establish new loans. So this is normal in most industries when it comes to getting financing, is that they have to adhere to certain requirements to make sure that that loan is sellable. So oftentimes you think, I know that my credit score is low, but I've been on time for the last year. Doesn't that make up for it? It still has requirements that have to be met in order for that loan to be sellable. If that loan is not sellable and it has to maintain on that lender's books, it's costing them more money than they want. It's not adhering to the schedule of how they need to proceed in their business. So they do have to meet those requirements, and that's why it seems like it's so strict. Even if you're super close, you're a point under, I know it's super frustrating, but they have to make sure that those guidelines are met so that the investor that they sell to, that's a sellable loan. So understand that it's nothing personal when it comes to credit scores, in the sense that they're not rejecting you specifically. It's a credit score requirement that is required. Now, some lenders may have what's called overlays, which means that maybe the investor says, I'll take on a loan at 600 credit score if it meets A, B, and C. Well, this lender may say, you know what, I'm only going to take a credit score that's 620. And the reason that they do that is because if a lender ends up having bad loans, so let's say that they go to sell the loan and it's rejected, that investor says, we're not going to buy this loan. Or if they do buy loans and they start seeing a pattern of default on specific loans, because of the crash that happened in 2008, the lenders are held at a higher degree of standards and they become more liable if those are bad loans that are sold. So you may find that a specific investor may say, yes, I'll buy it at a certain credit score, but the lenders are saying that it's a little bit higher. And that's why is that they need to make sure that that's a good loan. So even if you have the credit score requirements, the lender still may not approve your loan because of other factors that make it an overall higher credit risk, and they don't want to take on that risk. So yes, all lenders are going to have a specific credit score requirement that they have to adhere to no matter what for all investors, but some lenders may have a slightly stricter requirement, or you may meet the credit score requirement and they still may not approve your loan. So it's super important to understand that you just need to get your credit scores where the industry standards are saying that's needed for that specific purchase that you're trying to obtain. The good news is you can always improve your credit score. It just takes a little bit of time, understanding, and education. So continue to watch the series and get the information that you need. If you have specific questions, please reach out. Give me a message. I'd love to add an additional topic if you feel that there's a need for it. Thanks so much for watching.